about his profile for everybody. So Mr. Mohit Puteria is a chartered accountant. He is also an insolvency resolution professional, a registered valuer, securities and financial assets. He is a managing partner in AC Buteria and Company. He has a lot of professional achievements. He has stood first in chartered accountancy finals. He is also a co-opted member at the expert committee of ICAI New Delhi, co-opted member in study group of ICAI on guidance notes and upgradation of existing accounting standard on basis of corresponding Indian accounting standard and guidance note on CARU 16 and 2020, and paneled as a quality reviewer, peer reviewer, and with FRRB ICAI, made presentations on various topics of Companies Act for large number of corporates, addressed on taxation, company law, merger, demerger, restructuring, assurance and non-banking, finance, company issues as ICAI, ICSI, MCA, study circles under ICAI, Comptroller and Auditor General of India. He has also handled in aggregate more than 1,000 statutory audits of PSUs, banks, and private sector corporates. He has represented ICAI before CBI. Member of Governing Council of Peerless Skill Academy, a joint initiative on skill development between the Peerless General Finance and Investment Company Limited and Ramakrishna Mutt and Mission. He has contributed articles in various journals issued by study circles under ICAI. One of the key contributors in the technical guide on functioning of audit committee issued by ICAI in 2018 and guidance note on CARO 2016 and CARO 2020. He is also an independent director at GKW Limited. We are very pleased to welcome you, sir. First, I would also like to request Mr. Vivek Mishra, my co-moderator, to speak a few points on this said topic. Over to you, Vivek.
Thanks, Swagata. Thanks, very warm and
We are unable to hear you, Vivek. Please.
yeah.
You are
I
on
think
mute,
now it's
Vivek.
audible. Yeah. First of all, thanks for setting a tone, Swagata, for starting this session. And I just would like to thank Mohit sir from the core of my heart. From the day when I met with sir in ROC, then from that day I keep following sir. You have to take one of the session on NBFC, and my so many friends, those who are just looking that sir is there, then definitely we have several set of questions which we can put before our speaker, and then we can have an answer. And NBFC is such an unfold story that it can never be opened, and there are so many of puzzling questions which keeps on coming. Thanks for accepting our invite, sir. Thanks for doing this. Anil, you can speak, and then we can start the session.
Thank you, Vivek. Thank you, Swagata. And Mohit sir, thank you for gracing. And it is a huge demand. The way you speak and the kind of practical insights you share now, it's always a pleasure. Because we attend a lot of seminars, but the practical insights you share, that's always amazing. Either at various forums we are meeting and interacting. It's really looking for such an insightful sessions. Members, please ask as much questions because it's very rare to get the Mohit sir and extract as much as possible from him. That's my request to all the participants. Thank you, sir. Thank you for your kind.
Yeah. Thank you, Anil. Thank you, ma'am. Swagata, ma'am. Thank you, Vivek. Thank you for inviting me to speak on the subject. So, as Vivek has told, I'll be speaking on a core investment company, the unregistered CICs, basically, which if we are talking about. And one, we'll be speaking on the compliances required for various NBFCs, be it systemically important or be it non-systemically important, because a number of changes have taken place, and more so when the XBRL format has come. So quite number of changes have come. Everybody is confused. We are also at times confused what to be done and what not to be done. But be that way, I'll try to give a picture on that. On core investment companies, we'll briefly touch upon the regulations because you see for unregistered CICs, not much is to be done. But what is very important is that if you are a CIC which is exempted for registration, what parameters you need to follow. Again, if a group has multiple CICs, it may so happen that one of them or two of them may require registration for some reason or the other. So what I have designed my presentation in a form that we'll just touch upon what is a CIC, what are the few important definitions of this, and then we'll come to case studies. And as Anil was stating, and even Vivek had told me that through practical case studies, we have taken around 20-25 case studies. Through these practical questions, I would say, not case studies, questions, we'll try to answer, and we will have a, I think by the end of the session, we'll have a very finer picture of what is a CIC, how we should function, what precautions should we take, which CICs are require registration, which CICs do not require registration, so on and so forth, and how do we come out of this, gamut of NBFC which requires registration. So I'll just go a little back. You see, in 1997, RBI for the first time came out with the requirement that all companies carrying on NBFI business should be registered, and it was first time that RBI said that all companies carrying on NBFI business have and need to have a minimum net owned fund of 25 lakhs. They need to seek the registration. So there was a confusion as to what constitutes NBFC. Why do companies need registration? Many companies said, look, we are carrying on share dealing business. We are carrying on business of giving loans. We are carrying on hire purchase or leasing business. It is our money, or it is money belonging to promoters, directors, relatives, friends, maybe group companies. So why do we need registration? What is an NBFC? I mean, many questions, because the definition of NBFC, which was given in section 45 IC, said that NBFC is a financial institution which carries on and its business one or more of the following: acquisition of shares and securities, granting of loans and advances, hire purchase, leasing, but which does not carry on any industrial, in any trading, any agricultural activity. So be as it may, there was a lot of confusion, but still it was that if you want to carry on this business, even for dealing in shares, even with your own funds, you need to seek registration. So in view of this confusion as to what constitutes principal business, what are the tests to be satisfied for a company to be eligible to be an NBFC, on 8th April 1999, RBI came out with a circular, a press release, I should say, press release stating that there is some confusion as to what constitutes NBFC. There is what constitutes principal business. So what we say, a company will be deemed to be an NBFC or carrying on financial business if its financial assets are more than 50% of the total assets, and its income from financial asset is more than 50% of its total income. This means if my balance sheet size is 100 crores, at least more than 50 crores should be in financial assets, which are, say, shares, which may be in stock in trade or as investments, hire purchase, leasing, loans, all these financial assets. And my at least 50% of the income should be from from financial assets. So I should have income from share activities, income from loan, income from hire purchase, leasing, or any financial business which I. These were the two numerical tests given by RBI as to what constitutes an NBFC. At that time, we remember it was quite back. I'm talking of, say, almost 24, 25 years ago. So some companies approached RBI that we do not want to seek registration, because what we are doing, we are essentially only confining our activities to our group. So we are not lending outside our group. We are not doing investments outside our group. And we do not intend to carry on as such any business of NBFC. So at that point of time, way back in 1997, RBI on a case-to-case basis granted exemption from registration to some companies. But then RBI thought that over a period of time, we must have regulations even for such companies. So for the first time in 2011, RBI came out with this Core Investment Companies Reserve Bank Directions 2011. Directions 2011, and it defined as to what constitutes core investment company, who do not require registration, or who will require registration. And this has gradually developed, and finally today we have a master directions on core investment company Reserve Bank Directions 2016. So this comprises of certain types of such companies which say that no, I want to only confine my activities to the group. I don't want to do any activity outside my group. I don't want to seek registration. If I get registered as an NBFC, so I am subject to multiple directions. I am subject to acceptance of public deposit directions. I am subject to NBFC prudential norm directions. I am subjected to NBFC auditors report directions. I am required to file multiple returns from time to time. RBI, I want to do If I'm giving loan, I have to comply with the fair practices code. If I'm giving loan, I have to comply with the KYC directions. I need registration uh, with the core investment companies, all four CICs. I need to register with NESL. So multiple formalities are there, even if I am carrying on activities within the group. So now RBI said, okay, you then be a core investment company and confine your activities within the group. We will not require ask you to get registered. So this is a brief concept of what constitutes a a core investment company. So now I'll start my presentation. Just a second. So which just I missed it. Which arrow should I?
After just a mic, there is a video button, there is a mic button, and there is an arrow button. Open share tray. Just click that one, sir.
So this is coming now. This is coming.
Uh, no, yeah. Now it has come. Yeah.
Yes, sir, it is.
Yeah, perfect. So we'll be discussing on what constitutes core investment company. So what is a core investment company? So let us take there is a company which invests only in group. It may have shares in the group, debentures in the group, preference shares in the group, loans to companies in the group. It may have some furnitures, fixtures, land and building as its assets. So the requirement are a few conditions need to be satisfied. The first is at least 90% of its net assets uh, should be in the form of investment in equity shares, preference shares, bonds, debentures, debt, or loan in group companies. So basically, if your net asset is 100 crores, at least 90% should be in any form in your group companies. Then they say its investments in equity shares in group companies should not be less than 90% of the should not be less than 60% of the net assets. So you have 100 crores, at least 60% should be in equity. Now, in case of in equity or in compulsorily convertible instruments, which would be converted into equity shares within 10 years for the from the date of issue. I am now not talking of this InvITs, so I am leaving aside InvITs. So at least 90% should be in the form of equity, debt, or whatever instrument may be in the group. So out of 100 crores, 90% of net assets should be in the group. At least 60%, that is 60 crores, should be in the group. You may have out of 100 crores, you may have 60 crores, 70 crores, 80 crores, 90 crores. That is fine, but at least 60% should be in the group, and you should not trade in the investments in share debentures or any of these instruments in the group except through block sale for the purpose of dilution or investment. So it cannot be that on a regular basis you are buying and selling shares of the group. There may be a block sale for the purpose of dilution of the shares held by you in the so-called group companies. Now the question therefore arises is, as we have said, we have discussed 90%, we have discussed 60%, but it is net assets. Now the question arises, and finally further it says that you shall not carrying on any NBFI activity except investment in bank deposits, money market instruments, including money market mutual funds, government securities, bonds or debentures issued by group companies. You cannot carry on. You can invest in loan to group companies. You can issue guarantees on behalf of group companies. So again, 3 points: 90% of the net assets in group, 60% of the net assets in equity in the group. You can even invest in bank deposits. That is, although outside the group, that is permitted. You can invest in money market instruments, including money market mutual funds. That is again outside the group, but permitted. You can invest in government securities. It is outside the group. That is permitted. You can also issue guarantees on behalf of a group companies. So again, that is permitted. So this is what is the directions provide. And now the question arises whether you want to be registered or you want not to be registered, or you are required to be registered or not required to be registered. So we are taking up a case where the group's asset size of a company is less than 100 crores. It does not accept public funds, therefore it does not require registration. So if your asset size is more than 100 crores also and you are not accepting public funds, you do not require registration. But if your asset size is more than 100 crores and you are accepting public funds, then only you are requiring registration. So the directions defines unregistered CICs as CICs who do not require registration for the following reasons. Number one, their asset size is more than 100 crores, but they are not accepting public funds. Second, their asset size is less than 100 crores. They may accept public funds, they may not accept public funds. Now we have to understand two definitions. What does net assets means? And again, what does public funds means? They have also introduced for the first time into after the 2016 direction the concept of a group, and then they say that there may be companies which want to bypass the registration route. Why the concept of registration comes, and why do RBI says that if you are 100 crore or more or 100 crore or less, you want registration? The simple reason is that they want the concerns which may pose a systemic risk to the economy. They are fairly large in size. We want to watch their activities. And therefore, it may so happen that on a standalone basis, your asset size is less than 100 crores. You may be accepting public funds, you may not be accepting from public fund. But if we see that there may be a multiple CICs in the group, A, B, C, D, E, F, G, all are say of 20 crores, but taken together 6 CICs, it is 120 crores. Then RBI says that no, collective asset size of all the NBF of all the CICs in the group exceeds 100 crores, and you are also accepting public funds. So to those companies which accept public funds, which we'll mandate you to take registration. Now, when we take up case studies, we'll be more clear. Therefore, now the concept is that if you are a CIC, if the asset size is less than 100 crores, either singly or taken together, you are not accepting public funds, no registration is required. First. Second, you are a CIC following all the parameters. Your asset size is more than 100 crores. You may be a single company or you may be a multiple CICs in the group. You are not accepting public funds. You do not require registration. Third scenario, and what requires registration? You are a CIC, maybe a single CIC or multiple CICs. Your asset size is exceeding 100 crores. You are accepting public funds. Individually, the number of CICs with asset size 100 crores may be nil. So as I said, you are 6 CICs, each having 20 crores, A, B, C, D, E, F. One of them is accepting public funds. Therefore, collectively, we are 6 CICs with asset size 120 crores. We are accepting public funds. So a CIC requires registration. So which CIC would require registration? Only that CIC which is accepting public fund directly or indirectly will require registration. And if this CIC is funding other CICs by way of even equity contribution, then also it will be deemed that the other CIC is also accepting public funds, and that CIC would also require registration. Now, in the opening part, I said what is a CIC, whose 90% of the net assets is should be within the group, and at least 60% of the net assets should be again within the group. So again, they have defined what constitute net assets. Net assets means the total assets as per the balance sheet. Cash and bank balance are excluded. Investment in money market instruments and money market mutual funds are excluded. Advanced tax and deferred tax are excluded. So let me give you an example. I have a CIC, multiple examples. I have a CIC, I have a company, asset size 100 crores. Now, I want to plan my affairs in such a way that I do not want to get into the gamut of NBFI registration, but at the same time, I want to invest in mutual funds, government securities, but I want, so what do I do? Can I invest in bank fixed deposits the entire 100 crore? Yes, that is possible, because fixed deposits with bank are not treated as financial assets. Way back in 2011, RBI issued a circular, and now in the directions itself, the NBFC Prudential Law Directions itself, they have said that fixed deposits with bank are not financial asset. Therefore, entire 100 crores you can invest in fixed deposits. Now, can you invest in money market mutual funds and money market instruments? Yes, you can invest. So if you have 100 crores, that balance sheet size is 100 crores, you are investing 100% in money market instruments and money market mutual fund, that is also permitted. Therefore, if you have a 100 crore balance sheet and you invest in a combination of cash, in bank, FD, investment in money market instruments and money market mutual fund, there is no problem. So you can do that. Now, let us move a little ahead and a little complex situation. You have 100 crores. You say that I want to be a CIC. Now, out of this 100 crores, only 20 crores is invested in equity. Rest 80 crores are invested in debt. Now, debt in one or more group companies. Therefore, what is the requirement? Out of 100 crores, at least 90% of the net assets, and say 20 crores is in equity, 80 crores is in loan preference shares in group companies. Now, what the requirement is that out of 100 crores, at least 60% should be in equity. Therefore, 60 crores should be in equity. But what is your composition? Your composition is only 20 crores. Therefore, you are not meeting the criteria of a CIC. Therefore, you will not be termed as a registered CIC. So it may so happen that you may fall in the gamut of an NBFC, which may or may not require registration, again, depending upon whether your financial assets are, as I said, more than 50% of the total assets. Your financial income again may be more than 50% of the total income, for the reason that since you have only equity and debt in group companies, obviously you will be either earning in the form of dividend or interest from group companies. So 100% of your assets are in equity and loan and debt instrument, and 100% of income is coming from equity debt instrument. Therefore, you are basically a NBFC, and therefore this will require registration. So now what do I do? A group comes to you and say, look, 20 crores in equity, what do I do? So you can say, okay, you increase it to 60%. So at least make 60% to equity. But then they say, look, for the balance 40 crores, what do I do? I do not need funds in my group companies. Then you may advise, okay, you park your money in fixed deposits with bank, or you park your money in money market mutual funds. So what do? You say, okay, out of 100 crores, at least 60% should be in equity. So 60 crores is in equity. Rest 40 crores in, say, money market mutual fund. No problem. Money market, because what is the requirement? 90% of the net assets. So what is your total balance sheet size? 100 crores. What is net asset? Total asset minus fixed deposits minus money market mutual funds. So out of 100, 60 goes. So what comes? 40. Out of this 40, at least 60% should be in equity. So out of 40, 60% is 24. 24 should be in equity, but you have 40 in equity. So that is, quite well enough. So there is no problem. Therefore, instead, when my total asset size is 100 crores, out of that, I have to exclude fixed deposits with bank, investments in money market instruments and money market mutual funds, advanced tax. Then I come from 100, I deduct 60, I come to 40. Out of this 40, 90% should be in group. Out of this 40, at least 60% should be in equity. So this is how the computation and calculation is. Now, as I said, public funds, what constitutes public fund? They say public funds includes any money raised directly or indirectly through public deposits, ICD, bank finance, and all funds received from outside sources such as CP, debentures, but excludes funds raised by issue of CCD, compulsory convertible instrument into equity, within 10 years from the date of issue. Now, let us broadly consider, is intercorporate deposit a public fund? Yes, it is a public fund. Is funds raised by way of debentures, CCD, banks, public funds? Yes, it is a public fund. So if I want to raise money from one of my group companies or even from a third party in the form of a CCD, which has a conversion period within 10 years, is it a public fund? No, it is not a public fund. What do you mean by indirectly? Accessing public funds directly or indirectly. Directly means I do borrow. What do you mean by indirectly? So there is a company A which borrows and lends to me. So there is a borrowing by company A, it lends to company B out of that borrowing. So the fund which comes in the hands of B, although it is a direct borrowing also, because intercorporate deposits are direct borrowings. Now let us say A borrows and invests in B through equity. So again, it is a case of indirect borrowing because the subscription to equity which has been done by A is out of borrowed funds, and therefore B although has equity, but it is an indirect borrowing. This equity which comes in B is by virtue of A having borrowed funds, and through borrowing it subscribes to B. So therefore it is a case of public funds, indirect borrowing of public fund. But if in a case A borrows money and it subscribes to any convertible, compulsory convertible instrument of B with conversion period less than 10 years, then it is not a case of public borrowing, not a case of borrowing, not a case of public fund. Now, as we discussed, whatever discussions we made, all CICs uh, who need to apply to RBI for registration, as we said, only CICs with asset size of more than 100 crores and which have public funds need to apply to RBI for registration either singly or taken together. So you may have multiple CICs in the group. So when does a CIC say if I have multiple CICs in the group, I was not accepting public fund, my asset size crossed 100 crores, say today it is 110 crores, I am not accepting public funds. None of the 6 CICs, as I said, are accepting public funds. So do I need registration? No, I do not need registration. So when do I need to have registration? Say today is 13th May, and today 13th May, one of the CIC starts borrowing, starts accepting public funds. So once it starts accepting public funds, then we have a case where the 6 CICs aggregate in the group asset size more than 100 crores accepting public fund. Therefore, it needs to apply to RBI for registration. And when it will apply within 3 months of becoming a CIC accepting public funds, it needs to apply to registration. Now, in case of unregistered CIC, say my asset size is less than 100 crores or more than 100 crores, but I am not accepting public funds, but therefore I am not required to seek registration. But maybe these CICs who are not having public funds, having asset size of more than 100 crores, have given guarantees on behalf of the group company. So the moment, and if say guarantee devolves, and these CICs have to, honor the guarantees. If they are able to honor these guarantees out of their own funds, very well, since there is no public fund, no registration required. But tomorrow, if they so happen that the guarantees are invoked and they have to honor the guarantees out, and they do so by borrowing from public funds, then in that case, they have to seek registration. They have to seek registration. So I think all along we have been going good. And again, an important question arises: what constitutes companies in the group? Because we have talked of various terms, that 90%, we have talked of 60%, we have talked of net assets, we have talked of public funds, we have also talked of companies in the group. So what constitutes companies in the group? Again, that definition is given in the RBI directions. Number one, there are a number of categories. There are a number of items which comprises companies in the group. Accounting standard AS 18, related party relationship. Therefore, if you are a related party, as per accounting standard AS 18, as per accounting standard AS 21, as per accounting standard AS 23, as per accounting standard AS 27, in all these cases, you are, if you fall under AS 18, AS 21, AS 23, AS 27, you are related parties. Again, if there is a common brand name across all the companies, they are related parties. If there are common promoters, as per norms given by SEBI for listed companies, again then you are related party. If company A is holding more than 20% of equity of B, then again there are related parties. So the gamut of related parties or the gamut of companies in the group is quite vast. Therefore, if I talk of AS 18, who are the related parties? Who are the companies in the group? Associates, holdings, subsidiaries, joint ventures, companies floated by common promoters. So there may be two companies where their KMP are common, then both are group companies. So a company is promoted by, say, family, by Mr. A and his family. Again, there is one more company floated by Mr. A and his family. Then both entities are floated by common set of promoters. Therefore, basically all both A and B are group companies. So the definition of group companies, which is given in this core investment company Reserve Bank directions, are quite wide and enough, and therefore, you see, what happens generally, many companies come to us and say that, look, I am carrying on NBFI business. I have a company. I am dealing in shares. I am also, lending in group. I have some share equity and other investments in the group, but also I have outside investment. Now, how to restructure these entities? So therefore, you have to, and I don't want to get into the ambit of RBI registration. Therefore, what do I need to do? Therefore, we have to advise that, look, if it is so, then you have to confine your activities in the group. You are permitted to invest in bank deposits. You are permitted to invest in money market mutual funds. You are permitted to invest in government securities. So, as far as any investment outside the group is concerned, you can confine to these three assets. Rest you have to confine to your group. Group has a very enlarged definition. Therefore, if it may so happen that even presently your exposure which is there to some companies may or may not fall within the definition of the group. Therefore, if I want to align myself, align the company to ensure that it falls in accordance with these directions, I also may again align the relationship between the companies so that maybe out of my 10 investments, my 10 loans given, 8 are group, 2 are not group, and those two cannot be avoided for some reason or the other. Therefore, if I say that maybe out of 100 crores, 80 crores is in the group, 20 crores happens to be two entities which are not in the group. Therefore, what are the possible options? Either I recall all those loans, either I recall all those investments, or I arrange my structure in such a way that even those two companies to whom I have lent money also fall within the definition of the group in terms of the definition which is given in the CIC directions. So, so far I think so good. Any questions?
Sir, we are good to go as of now.
Yeah. So now we'll take up the case study. So, Vivek, can we have a two-way conversation? So we'll put up the case
Yes,
studies
yes, sir.
and
Sure, sir.
people can respond, and then we'll discuss. So there, you see,
Yes, yes, sir.
this is a case where there is an CIC which was previously exempted from registration and whose asset size is less than 100 crores. Is it, so therefore the question arises is that before these directions came, there was a company which was following the parameters of CIC. Its asset size is less than 100 crores. Now, the first and fundamental question arises, do we need to go to RBI and say that, look, I am falling within your criteria of CIC directions. Therefore, do I need to apply to you to say that, no, please consider this my balance sheet and tell that I am not required to hold registration, not required to register, and you will give me some exemption. Is it so, or do we do nothing? So, what is the view of the house?
Anybody has an opinion that whether it is required or not, they can unmute themselves and they can reply this answer.
Yes, hello. Yes,
Yeah, yeah.
I think that no application is required to be submitted for exemption since the RBI guidelines doesn't require the company to submit any application for exemption. If the company is a CIC, then it is a CIC.
Perfect. So, thank you so much. Very well answered. Very well answered. So, nothing doing. Uh, you have to arrange your affairs in accordance with the directions. You need not even write to RBI that I am unregistered CIC. You need not write to RBI seeking his approval that look, you are an CIC which is meeting the criteria for being exempted from registration. So I am giving you exemption. Nothing of that sort is required to be done.
Sir,
So next,
sir, I have one query here, sir.
yeah. We
Sir,
can,
can
yeah. I
sir,
think we have around 20-25 case studies. So I think many of the queries which you may have will be answered. But if there is any unanswered query at the end, I'll surely answer it.
Sir, can the auditor write in his CARO report that the company is a CIC?
Why
Or
not?
should the auditor write? Should the auditor write?
You see, in the company's auditor's report now there is a specific question that whether the company is a CIC and it continues to comply with the requirements of CIC as per CIC directions. It also talks of multiple CICs in the group. Therefore, in the company's auditor's report order, you have to state the fact that it is a CIC, and for that you have to ask the company that maybe a company has not done anything of that sort, like its balance sheet is reflecting the position of a CIC, but generally what we advise the client, look, your object should also reflect the fact that you are a CIC, your minutes should also reflect the fact that you are a CIC, and you should pass a resolution every year. That is also a requirement of the CIC directions, that you pass a resolution every year that you will not accept public funds from public funds. So that is to be done. So rest, if these things are done, then in the company's auditor's report order 2020, you will state this fact that the company is a CIC, and the company in the notes on the account say segment reporting is applicable to the company. The company will say, I am doing the business as a core investment company, and segment reporting, if required, may be given. Or if it says that no, I am a CIC confined to a single segment and I'm considering CIC as a single segment, then no segment reporting is required. Right?
Hello.
Yeah.
Sir, I have one question.
Yeah.
So as you said, resolution is required to pass about the not accessing the public funds. It is basically by the board and one thing.
Board.
Yeah, and it should be annual basis.
Annual basis.
Okay, and is it required to pass by the shareholder also? I mean, and
No.
file to the ROC and all?
No, nothing. Not required to be passed by the shareholders, not required to be passed by ROC. Look, so to this question, again, a fact which may arise that the company comes to us that I had incorporated my company to carry on, say, some trading business, some manufacturing business, some service business. Now what has happened that all my assets are in the group, and now I want to regularize it. So we say, okay, now would you want to pursue the trading and the manufacturing or the service business? They say that we may pursue, we may not pursue. Then we say, okay, do you want your substantial at least 90% of the assets in the group? Yes. Therefore, you are essentially a CIC. Yes, I am essentially a CIC. So your object should also reflect this fact that you are a CIC. So enabling clauses be inserted in the objects memorandum. Again, while drafting the minutes books, you can review them as per the CIC requirement that yes, our exposure is in the group and we are meeting the different facets of 90%, 60% as far as RBI, as far as CIC is concerned. But no resolution as far as a shareholder, no filing of resolution to RBI or to ROC is required.
Okay, sir.
Right.
Thank you. Thank you so much.
So, yeah, third question. A group is having under 4 to 5 prospective CICs with an aggregate size of 100 crores. In such a situation, which company among the group is required to seek registration, assuming none of them accepts public funds? Is any one company required registration? Any views? Any view from anybody?
Yeah, participants can answer.
So none of the 4 companies or 5 companies require registration because the asset size is more than 100 crores, but they are not accepting public funds. So next is, as we said, a group is having under fold multiple CICs with asset size more than 100 crores. One of the entities holds public funds. So the question is, in such a situation, whether every CIC within the group or only parent CIC or the specific entity that holds public fund would be regarded as CIC non-deposit systemic important and would require registration. So there is a H company parent holding 100% of equity capital of A, B, and C, all of which are CIC. only C accepts public funds who are required to get registration. So as I said, in this case, if all the companies have asset size in aggregate more than 100 crores, and if whosoever is accepting public funds, only that entity needs to have get registration. In this case, since C has accepted public funds, only C is required to get registered. So there is a company, it has investment in its subsidiary. Will this, now the question is, there is a company A, it has an investment in there is another company B. A has invested in B and B has invested in C. Therefore, as far as when we have to calculate 90%, do we only include our assets for the calculation of 90% or also the assets of my subsidiary for the purpose of calculation of 90%? So what is important is here is I have to see my balance sheet, A has to see its balance sheet, and A has to see whether out of that 100 crores asset size, at least 90 crores is in group. Now, I cannot consider investment beyond my balance sheet. So if I have invested in a company B and B has invested in C, then I am not concerned with what B has invested. I am only concerned with my balance sheet. So I am not concerned with investment of subsidiary.
So every company will look after their own balance sheet instead of looking about their subsidiary.
Correct. Every company would look into its own balance sheet and it will see out of the total assets, how much I have invested in group. I am not bothered how much my subsidiary or my group company, how and where it has invested for calculating this 90%. I am only to look into my balance sheet. So next question, in
Thanks
case
for
an
clarification.
in case an existing NBFC non-deposit systemic important is converted to CIC NDSI after fulfilling the criteria, will the existing CR will continue? So the question is, there is an existing NBFC. Now it says that I don't want to carry on business as an NBFI. So what it has done, it has invested and it meets the 90%, 60% and other tests. So all 90% of its assets is in group companies, at least 60% is in equity. It is not carrying on any other financial activity of loans, investments, or exposure of financial assets of any third party outside the group. Now it says that what should I do? So, and two situations, asset size may be less than 100 crores. Another situation, asset size may be more than 100 crores and accepting public funds. So in one situation, since it does not want to continue business as an NBFC, it meets the parameters of CIC. Asset size is 100 crores and less or 100 crores or more, but not accepting public funds. So it can go to RBI, apply for deregistration as an NBFC. That look, I don't want to get registered as an NBFC. I am surrendering my certificate and I am now confining me to the investment parameters as per the CIC directions. So this is one aspect. Second aspect, it is an NBFC registered with RBI. Asset size is more than 100 crores. It is accepting public funds. But now it says that no, I do not want to carry on business as an NBFC. Again, I will only do it as within the group as a CIC. So then what it needs to do? It needs to apply to RBI that look, my registration is as an NBFC. I want to register myself as CIC. Therefore, RBI will advise them to make a formal application for surrender as an NBFC and for a fresh registration as a CIC. So this is how the process goes. So we have talked a lot about that 90% of the net assets should be within the group. 60% of the net assets should be in the equity in the group. So often question arises, what do I do with 90%? So what RBI says that what do I do with the 10% balance? So what RBI said, this 10% can be in furnitures, fixtures, immovable property, office, which may be required for the administrative functioning of the company. It may also be in any other asset which is not a financial asset. So therefore, out of 100 crores, there may be a situation 99 crores is in the group and 99 crores is in the group, or 99 crores, 99 lakhs is within the group, and only 1 lakh is in the form of furnitures and fixtures and computers. That is also possible. or out of 100 crores, 90% is within the group. The remaining 10 crores may be in the form of furniture, fixtures, say investment in gold, say investment in real estate, office equipments, that is also permissible.
So you mean to say, sir, in those 10% we can have an immovable property as well?
Yes, 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 that is permissible. Now another
Pushpa,
question is,
madam, you have related question. One madam is putting his hands. Madam, you want to
yeah,
speak, or you can your case study?
yeah,
You
please.
can either you can unmute. Madam, you can unmute yourself and put a question.
Good evening, sir. This is Priyank.
Okay, sir, you can continue.
Yeah.
Hello.
Yeah.
So yeah, the question is, I have said that 90% of the investment should be in the group, and when I have talked of group, uh, I have said that 90% should be in the group. So when I have talked of group, I have referred to companies as per AS 18, 21, 23. Now the question is whether investment in LLP partnership firm would also be regarded as investment in group companies. No, these are not group companies. So a partnership is not a company, LLP is not a company, a trust or AOP is also not a company. So that they will not be included for the purpose of calculating that 90%. Now the question
I think your
arises.
answer, your query is answered.
Yeah. Now the question arises: are CICs systemic important company? You are a CIC, you are a non-deposit, but you are a systemic important company. So do you need to comply with prudential norms directions? Do you need to comply with the income recognition, asset income recognition, provisioning for bad and doubtful debts provision as per NBFC's prudential norms? So what has now happened that RBI earlier did not had any prudential norms directions for a core investment company. Now they have said that if you are a CIC which is registered, then you are required to comply with the prudential norms as provided in the master directions relating to CIC. So we have a master directions, core investment company, Reserve Bank directions 2016, and in terms of that you are required to comply with the prudential norms. Would CIC require NOC in terms of Regulation 7 of FEMA in case they want to invest abroad? Yes. If you are a CIC, non-deposit taking, systemic important, for outbound investments, you are required to seek RBI approval. Again, that is subject to the FDI regulations. Yeah. So this we have discussed. Whether CICs having asset size below 100 crores are regulated by Reserve Bank? No, CICs below 100 crores, assuming they are not forming part of the group CICs requiring registration, they are not regulated by Reserve Bank of India. So there is a concept of self-regulation. You regulate yourself. Again, auditor, you will see whether you are complying with the CIC directions or not. Now the question arises, what constitutes block deal? And is there any minimum number of shares to be transferred to? Because they say that you can only transfer by way of a block deal. So in listed companies, we may have a block deal on the floor of the exchange, and what constitutes block deal has been defined. So what RBI had said in a FAQ, that if it is a case of a transfer from one promoter to another promoter, that you are selling en bloc and a new party is acquiring it, it is a case of en bloc sale. But let us say that you are holding presently 80%, you want to sell 5% to a third party, so that your holding, your investment, say you have holding 80% in a group company now, and if it is say in the form of unlisted shares, or say it is in the form of listed shares, can you trade on the shares? I cannot trade on their shares. So say, therefore say I have 80% holding in a group company, and that group company is an listed company. Can I, out of 80%, 1-2% I can sell in the market? No, it is not permitted, because RBI has said that you can only do as per the block deal or a block sale. So that trading in the market is not permissible. Therefore, if I am say I am holding 80%, out of this 80%, I want to transfer at least 20 or 30% to another promoter who happens to come into this company as a co-promoter. Is it permissible? Yes, it is permissible. So it cannot be cases of isolated trading of shares. That is not permitted. Can CIC accept public deposits? No, CIC cannot accept public deposits. What does the form public funds? Public funds are not same as public deposits, but public funds are, I think, one step ahead of public deposits. Public funds includes public deposits because other than public deposits also, public funds includes bank finance, intercorporate deposits, CP. Unlike public deposits, in definition of public deposits, bank finance is not a public deposit. Therefore, public deposits includes public deposits is a subset of public funds. We have discussed indirect receipt of funds. Group company we have discussed. Yeah. So what has happened? So yeah, see, we have two sets of companies. When we talk of a normal NBFC, one is a systemic important NBFC, one is a non-systemic important NBFC. Now, as far as non-systemic important NBFCs are those which have asset size of less than 500 crores, either individually or taken together with other NBFCs in the group. Now, these NBFCs are not subject to any exposure norm. So there is an exposure norm that beyond which you cannot invest in a single company or group companies either by way of loan or investment. So those companies which are not systemically important, they do not have any exposure norms. So they are free to invest as much uh, uh, amount in a group company as they like. Therefore, say you are a normal NBFC, which is not systemically important, registered with RBI, asset size is 100 crores, you want to invest 80 crores in a single company, say in Tata Steel, say in Reliance Industries. You can very well do. There is no concentration norms. First. Second, you are an NBFC, you are systemically important. So what is a systemically important company? Asset size more than 500 crores, singly or taken together with all the other NBFCs in the group. So you have asset size more than 100 crores, you are not accepting public funds. Since you are not accepting public funds, do the concentration norm apply? No, the concentration norms not apply. Again, you are free to invest in the manner you want. Third situation, you are a company, you are a systemic important company, asset size is more than 100 crores, 500 crores, you are accepting public funds. Now the question arises, if you are accepting public funds, can you bypass exposure norms, or do the exposure norms apply to you? Yes, the exposure norm do apply to you. 15%, there are exposure norms of 15% in a single group, single party, 25% to a group of parties, investment and loan taken together 40% to a group of parties. So the concentration norms apply. Therefore, what you can do, that if the concentration norms apply and you want to go beyond the concentration norms of 40%, some relaxation is there in the directions. But if you want to go even beyond the relaxations, you want to invest 60% or 70%, then as NBFC, as systemic important, you will not be able to do so. Then the only recourse left to you, if you want to continue with beyond 40%, beyond 60% or 70%, you have to plan your affairs so as to you fall within the CIC category, and therefore you have to deregister as an NBFC and get registered as a CIC. Now the question arises that first, how do I become CIC? That I have a company, I was doing trading, I have invested in group companies. Now, first, often the question arises, how do I make myself a CIC? It is simple on paper, as we discussed, memorandum articles, board minutes and all. You can arrange your affairs as per CIC directions. You become a CIC. So often people ask, first, should I apply as an NBFC and then I convert to CIC? Or how do I know? Or even how does the RBI know that I am a CIC? The question is, neither RBI should know that you are a CIC. First, you should know whether you want to do your activities as a CIC or not. So you plan your affairs accordingly. You become a CIC, and accordingly prepare your balance sheet, prepare your minutes accordingly as a CIC, that you are the, which will depict the fact that you are a CIC. And tomorrow, if somebody asks, you can tell, look, I am a CIC. This is reflected in my memorandum. This is reflected in my board minutes, my business plans, and my balance sheet will reflect the position that I am a CIC meeting the 90%, 60% norm. I am not carrying on any other NBFI activity. I am not giving loan to any third party. I am not doing investments in shares of any third party. So that is fine. So tomorrow, if somebody asks, you can always well say. Now the question is, being a CIC, it may so happen I may not have earned any income from my group company by way of loan, interest on loan, or by way of dividend on shares. So does the twin test of 50-50 asset is required? As far as CIC is concerned, there is no requirement of 50-50 test. So long as your asset deployment conforms to the CIC directions, whether you have income or not, it is not material. Therefore, can even I travel a little far and I can do something which is outside the ambit of NBFC? Yes, that is permitted, for the reason that they have said that you cannot carry on any other activity, financial activity referred to in 45 ICA and F. They have not stated that you cannot carry on any other business activity. Therefore, being a CIC, you can, so long as you fulfill all the asset deployment criteria, even if you say you have a non-financial income, that would be okay. Even if you do not meet the income test, any income test, as such, there is no income test. Therefore, if you do not have any income from your such investments, then also it does not, make you make the lead to any violation of the CIC law.
Not expensive, ठीक ही था.
So this we have all discussed. We have discussed. Yeah. Are CIC permitted to invest in liquid funds? Yeah, because these are money market instruments, and liquid fund invest in government securities, in treasury bills, and these are all money market instruments. Since the underlying assets in which the liquid funds invest are money market instruments, they are permitted to, company is permitted to invest in liquid scheme of mutual funds. So this is all about CIC. If you have any question on CIC, we can take up, or next take up what are the returns required to be filed by the NBFCs.
Hello, sir.
Yeah.
Yeah, so can unregistered CIC invest in money market instruments?
Yes, they are permitted. They are permitted to invest in money market instruments and money market mutual funds.
And regular mutual funds and all?
Not regular. You cannot invest in an equity oriented mutual fund. You cannot invest in a debt fund, because these are not money market mutual funds.
But unregistered CIC, I think these guidelines, I mean, in the notification, it is mentioned that these guidelines are not applicable to unregistered CIC. It was a bit confusing.
No. Yeah. You see, what I said, that you have to meet the asset deployment test. Like, since you are not registered with you, why are you exempted from registration? For the simple reason that your asset size is less than 100 crores, not accepting public funds, or your asset size is more than 100 crores, not accept, your asset size is less or more than 100 crores and you are not accepting public funds, or your asset size is less than 100 crores, irrespective whether you are accepting public funds or not. So it is a case of self-regulation. Now, when it is a case of self-regulation, what they have said, that you will be exempted if you meet the 90%, 60% test. You do not invest in any securities other than government securities, money market mutual funds, or money market instruments. Equity fund, debt funds are not money market mutual funds. Therefore, if you invest in these money market mutual fund, it will be deemed that you are carrying on NBFI activity as per 45 IC. So that will be the case of violation.
They are about 10%.
Okay, sir. And
Even in
this
10% category, you cannot invest. So that is very, very clear. Very clear.
okay, sir. Okay. And is there is an annual compliance to be done by unregistered CIC?
No, no compliance with RBI is to be done by unregistered CIC. Now the auditor, while auditing it, is to ensure that the company is complying with all the parameters of a CIC, and the company secretary or the management again has to ensure that they meet the asset deployment tests of a CIC.
Okay, sir. Thank you. Thank you so much, sir.
Yeah, yeah.
Sir, a private limited company with paid up capital of 1 lakh and it is investing in other companies like venture capital and the main income is like capital gain and dividend, whether it needs to be registered as an NBFC or
Correct. So again, I go back to the 8th April 99 press release issued by RBI. What is said, if your financial assets are more than 50% of total assets, your income from financial assets is more than 50% of total income, you need to get registered. So in the case under consideration, what you have said, all the assets or more than 50% of the assets are in financial assets. More than 50% of the income is coming from financial assets. Therefore, you need registration. You are not a CIC. You need to register yourself as NBFC. Else, you will be violating 45 IE of the RBI Act 1934, which may entail a penalty of up to 5 lakhs and imprisonment for up to 5 years.
yes, sir. Thank you. Thank you, sir.
Yeah, yeah. So we come to the second presentation. Just a second. On returns applicable for NBFCs. Yeah. So this is visible.
Yes, sir, it is visible.
Yeah. You see, what are the returns to be filed by first we are taking non-systemical NBFCs. So what now RBI said that earlier we used to file an auditor certificate SEC by 31st December. Then we used to file NBS 8 or NBS 9 within 31st May, depending upon whether the asset size is less than 100 crores or more than 100 crores. Now RBI has come out with this scheme of XBRL. And we had also circular by RBI on return filing, but that circular has not yet been updated, and they still are showing the old formats of the return and the old returns to be filed. Now, what RBI has been selling all along to non-systemically important companies, that you please file DNBS 2 and DNBS 10, even for FY20 and FY21, irrespective whether you have filed SSC and NBS 8 and 9 or not. So this is first thing. So what you need to do, you need to register yourself. You need to write to RBI. They will give you the user ID, password, and everything. They have a XBRL guidelines also. There is a circular, detailed circular on how to do this XBRL, filing of returns. So first of all, you have to go and in the XBRL, after obtaining the user ID and password from the RBI, you have to update your company data on the XBRL platform, and then what they say that for first of all, for FY20 and FY21, you please file DNBS 2 and DNBS 10. On DNBS 2 is a very what do you call extensive version of NBS 8 and 9. So it is not that small as NBS 8 or NBS 9 was. It is quite a detailed format. So you fill DNBS 2 in XBRL. And what we used to do for auditors, the statutory auditor certificate SSC, which we used to file, instead of that, they are saying that DNBS 10 you have to file. Again, DNBS 10 is a very extensive format. And for the first time in the format, RBI has asked specifically to the auditors that are the companies, like among others, are the companies member of all 4 CICs? If not, please say. Is there any violation of the company of the directions issued by RBI? And if so, have you filed an exception report? Please say. Is the company registered with CIC? Please say. So now RBI has come to know that there are many things which a company is not doing, and even nobody is reporting. You see, auditors have NBFC auditors report directions, and in that directions there is an obligation of the auditor to report on every non-compliance which may be made by the company in relation to compliance with RBI Act 1934 and all directions issued thereunder. So whether you are not complying with the prudential norms for income recognition, asset classification, provisioning, whether you are not meeting the leverage ratio, whether you are complying with KYC directions, whether you are complying with Credit Information Regulation Act and rules thereunder, where you are complying with NESL information utility directions, whether you are uploading data to them or not, whether you are registered with CKYC, SARSAI, and filing regular data as may be required, whether entire process of onboarding of a customer, you are if you are saying a digital lending platform. So specifically, there are a large number of companies engaged in digital lending which have been recently inspected by RBI. And I think almost, if I say pan India, I think majority of the companies have been covered in the inspection by RBI. And in majority of the cases, they have found that they have flouted various norms. They have flouted the Fair Practices Code. They have flouted the grievance redressal mechanism. So they are not using their own platform for lending. So they are lending. They are giving money through some technology companies to platform of any other company, not through their own bank accounts. They are charging excessive interest. So again, these companies have been subject to inspection, and many of them have been show cost for cancellation of certificate of registration. So now RBI wants the auditor to say everything in the DNBS 10. So this was till FY 2021. Now the XBR return, like as I said, DNBS2, it has to be filed annually within 15 days from the end of the quarter. There is a DNBS 4A on short-term dynamic liquidity. Again, it has to be filed quarterly. This is to be filed quarterly within 15 days. Again, we have a structural liquidity return which has to be filed monthly, and this is only to be filed for companies with asset size more than 100 crores. We have another DNBS 10, as I said, auditor certificate. This is to be filed annually within 1 month from the finalization of balance sheet or by December 30th, whichever is earlier. Generally, companies file this auditor certificate immediately after they generally prepare the audited accounts and get it signed by the auditors. So we have one overseas investment. So if you have overseas investments abroad, you have to file DNBS 13 quarterly. On a certificate, auditor certificate on compliance with FDI, you have to submit half yearly, again within 30 days from the end of half year. Therefore, if you are a company which does not have any FDI, FDI means you have an FDI, in the form of an equity or a debt, you have a foreign direct investment in your company, and whether you are complying with the FDI norms or not, again the auditor will certify, and this is to be given half yearly. Now, in practice, what we see many offices of RBI, again, irrespective whether you have FDI or not, they insist upon you to furnish this certificate that you do not have an FDI. You please mention this fact and furnish an auditor certificate. So generally, we advise our client as a matter of routine that irrespective whether you have a FDI or not, please file these two auditor certificates, 30th September and 31st March, within 30th October and 30th April with RBI. CTR, this CTR cash transaction report is required to be filed with FIU, and it is required to be filed only if we have a cash transaction or a series of cash transaction in excess of 10 lakhs in accordance with what the PMLA law has stated, and that it will be filed within 15 days from the end of the month. We have an STR, again, what the FIU, the Prevention of Money Laundering Act, defines what constitutes a suspicious transaction. So whenever you have a suspicious transaction, within 7 days of happening of a suspicious transaction, you have to file the STR with FIU. And again, there is again a direction in KYC, para 52 of KYC directions, that if you have certain accounts which are resembling to Al Qaeda list, and RBI keeps on sending you the list of some prohibited entities, barred entities, that is also available in website, then again you have to upload the data. Now, CKYC within 10 days of entering into an account-based relationship, like you have granted a loan to individual, say, within 10 days of that, you have to upload the KYC detail in the CKYC website. Now, if you have transactions which are attracted under FATCA, that is under as per income tax, then Form 61B you have to file with income tax. If you are lending against securities as a, then immediately you have to give the details of the shares pledged uh, uh, to the stock exchange. If there is a change in control ownership, we all know beyond 26%, and if there is a 30% change in directors, so both require prior approval, and you have to comply with the formalities relating to prior approval. Then there is a FIMDA reporting if you are dealing in secondary market transactions in corporate bond market in corporate bonds, then you have to file these returns. And these are the returns again applicable to systemically important NBFCs. And here what is important is that what is a systemically important company, either individually or taken together with all the entities in the group, you have asset size of more than 500 crores. So as and when, say as on 31st March 22, you have 4 or 5 entities which are NBFCs. An asset size of all the 5 NBFCs taken together exceeds 500 crores. So maybe some has 400 crores, some has 40 crores, some have 3 crores, some has 50 crores. Taken together, all becomes excess of 500 crores. So as soon as the balance sheet is drawn, you need to apply to RBI that look, I have become systemically important companies, and all those companies then all those companies have to comply with regulations as applicable to systemic important companies on and from the date they become systemic important. They attain the asset size of more than 500 crores, and then you have to file all these returns. So I'm not repeating these returns, that is all in the slide. You have to file one DNBS 1. This relates to financial parameters. DNBS 3 relates to prudential parameters and short-term liquidity, interest sensitivity, CRILC main return. This is about the trade information on aggregate exposure of more than 5 crores to a single borrower. So all these returns you are required to file with RBI. So as far as these systemically important companies are concerned, the work becomes quite voluminous, because every quarter you have to file all these returns. And basically when you are required to file all these returns, you have to almost prepare a quarterly profit and loss and balance sheet. Large number of data is required to be reported. Who are your top 10 or 20 NPAs? Who are your top 10 borrowers? Who are your top 10 or 20 or 25, I think 25 lenders? What is the list of top 25 investments which you have made? uh, uh, what is the quantum of standard asset as the beginning of the quarter? How much it turned into NPA? What is the movement in NPA? What is the movement in gross NPA? What is the movement in net NPA? Lot many details are required to be defined. So if you have fraud, then you have the fraud monitoring returns again to file. These returns have changed. Now, earlier it were not in XBRL. Now all have come in XBRL. So this is all you are required to file with RBI. So this is all about the returns to be filed. I'll share the presentation with Vivek, and if anybody needs can ask for it. And if you have any questions, I'll be quite happy to answer that.
So we have few questions.
Yeah.
So if a listed NBFC wants to appoint NRI or foreign national as MD, what are the RBI compliances required to be done for this, sir?
No, so therefore, if it is a listed NBFC, then it is owned by Indian promoters. Now it is owned by Indian promoters, and it wants to appoint NRI as a director. So as far as there is no provision, though no requirement to be complied as far as the RBI directions are concerned. Now, when it comes to non-systemically important NBFCs, now when it comes to systemically important companies, you are required to constitute a nomination committee. A nomination committee will evaluate whether the director is fit and proper or not, and then it will recommend to the board, and then the board will appoint. you need not go to RBI. I presume you are an Indian company, and therefore you need not go to RBI for appointment of that NRI, non-resident Indian, as a managing director.
Okay, okay. Thank you, sir. So the next question is, sir, NBFC purely into investment activities are exempt from uploading data with credit information companies. Do they still need to register with CIC?
No, you are very right in saying they are pure investment companies. Therefore, what will they upload? They do not have any customer interface, so they will not upload anything, and that is why RBI has specifically exempted them from becoming member of CIC. So they are not required to become any member of any CIC.
Okay, so they don't need to register.
No.
So as per RBI circular dated 27th April 21, which is applicable on NBFCs having asset side of more than 1,000 crore. However, RBI has sent a mail to all the NBFC companies that they have to inform RBI about appointment of audit firm, which should be a partnership firm within 30 days of such appointment. Does all NBFC require to follow this, sir?
Yeah. So when this circular had came in April 21, it was followed by an FAQ. Lot of confusion was there. Lot confusion was there, and you see what RBI has said in the 27th April circular, that existing NBFCs with asset size less than 1,000 crores can continue with the extent procedure. For companies above 1,000 crores, they had laid down certain procedures, that who are the auditors, and that is why, if you have seen, they had laid down that you could have a maximum 3-year tenure if you are an auditor of a company NBFC with asset size more than 1,000 crores. So many companies which had asset size more than 1,000 crores changed the auditors, and they were required to follow the mandatory requirement before appointment of an auditor, that is their fit and proper criteria even for auditors beyond for asset size beyond 1,000 crores, and Form B was required to be filed. So they had, but what has happened that after that, last few months, RBI has been writing to all companies to submit that Form B. So there is quite a number of confusion, and the Form B, the way it is worded, as far as companies with asset size less than 1,000 crores are concerned, it is not desired that the auditor will be rotated every 3 years, rotated 3 years, and they can follow, the companies can follow the extent procedure as per Companies Act. So this was again a subject matter of discussion with RBI. So they said, okay, Form B you modify and submit, but please provide us the details of the auditors, who are your present auditors. So to that extent, you may modify and submit the Form B.
Okay, okay. Thank you, sir. So there is another question related to this circular only, 27th April 21, that one of the criteria of eligibility of appointment of auditor of NBFC is auditor should be a partnership firm. So there is an ambiguity in the applicability of the circular on base layer NBFC. Does base layer NBFC have to replace auditor if they are proprietorship firm or appoint a partnership firm as that?
So again, you see what has happened. FAQ had created all the confusion. The more confusion was created for the reason that in the FAQ, after the 27th April circular, RBI said that there is a cap of 8 for auditor on NBFC, that an auditor cannot audit more than 8 NBFCs. Therefore,
Yes.
a question arose that, look, the 27th April circular is applicable only to entities with asset size more than 1,000 crores. And therefore, ideally, the cap also should be applicable to only those auditors who are auditing entities more than 1,000 crores. But there is a lot of confusion. We wrote to RBI directly. We wrote through our institute to RBI. So many things happened. Then finally, what RBI said informally, that look, this cap of 8 is applicable to all, because what they have said, this cap of 8 is applicable irrespective of asset size. But as far as entities less than 1,000 crores are concerned, whether it would be proprietorship or partnership, or whether the eligibility norms laid down in 27th April circular would apply. So there is much clarity now that those uh, eligibility norms do not apply for entities less than 1,000 crores. Because if that were to be so, then no proprietorship would be able to audit an NBFC.
Yes.
Correct? Yeah.
Thank you, sir. So another question, RBI has merged the loan taking NBFC and investment NBFC in one criteria, that is ICC. But section 186 still reserves different stand for loan NBFC and investment NBFC. Please throw some light on whether section 186, both loan and investment NBFC, can be treated as in the case of RBI Act.
So what they have said, if you see section 186, the language of the section is not very happily worded. What they have said that number one, 186 will not apply to a company engaged in the business of financing industrial enterprises. So this is one. Secondly, there is a clear-cut exemption for the company established with the object of and engaged in the business of financing industrial enterprises. So you not only should be incorporated, your memorandum should not only should have this object, but you should be actually engaged in. If you have only the object, but if you are not engaged, you will not be able to get this exemption. That is what they have said. To look at the language, they have said to any investment made, comma, in respect of investment or lending activities by an NBFC registered under Chapter 3B and whose principal business is acquisition of security. Right? So a question arises. So what is made by to any investment made, comma, in respect of investment or lending activities? Therefore, we think the intent of the law is that in respect of a company whose principal business is acquisition of securities and which is registered under RBI Act 1934 as an NBFC, in respect of those companies in investing and lending, they loan and investments, 186 provisions will not apply to these companies. But yes, if you are giving guarantee, there is a very good question. Like there is a blanket exemption made for companies engaged in financing industrial enterprise. But as far as ICC are concerned, if your principal business is acquisition of securities, loans and investments are outside 186, but then securities and guarantees are covered within 186.
Thank you, sir. I would request other participants if anybody has any other question.
For the
Yeah, they can put in their chat box if they require.
Yes.
So if we do not have, then Swagata, we can wind up.
Okay. I think there is. So one question is there in the chat box. It's saying that a company was fulfilling the CIC criteria till February 2022. Due to purchase of financial asset, the company lost the fulfillment of the 90% asset size criteria in March 22. However, the company re-achieved the CIC threshold criteria from May 22. Thereafter, the balance sheet of the company is signed at the end of May 22. So in that case, whether the balance sheet for the FY 31st March 2022 mentioned that the company is CIC.
Yeah. So the question now arises. So why this has happened? Why say as whosoever is put into the question. So maybe say out of 100 crores you were fulfilling 90%, 90 crores was there. Maybe 5-10 crores you have invested somewhere else. Now the question is you have violated CIC because CIC says that you cannot carry on financial activity. Therefore, technically for that period, you have violated the provisions irrespective whether you have regularized subsequently. So to that effect, the auditor must state in the company's auditor report because in CARO 2020, auditor is required to comment whether the company is in CIC requiring registration or is unregistered, and whether it continues. So therefore, the auditor in that situation may say, should say in the report all these facts. And if I may go a little further, so technically as on 31st March 2022, it was not a CIC, but was an NBFC. So there is an obligation on the RBI, on the auditor, even to report to RBI of this non-compliance made by this company. Now then the company may respond to RBI that look, intermittently it happened for this reason or whatever reason, not going to happen in future. So again, the responsibility is on the auditor as well.
नोट में तो मुझे चीजें 580 के बोलते हैं ना, है ना? एक्सेप्शनल आइटम की क्या आप बता रहे थे ये जो अशरफ इसका सेल.
So Vivek.
Yeah. So you can conclude this.
Okay, thank you so much, sir. It was a very informative session. We could unfold a lot of things which we were not very sure. We learned a lot of new things. And there was every bit of information was very useful, sir. We could know that a common brand name, if all the group companies have common brand name, they are all related parties. This was a very new piece of information for me. And a lot of CIC is permitted to invest in liquid funds. We came to know about the compliances to be made by the CIC. Thank you so much, sir. Thank you very much. And thank you all the participants who attended this session. Thank you very much. Vivek, you want to say something?
No, we can conclude. Yes, let's conclude. Thank you. Thanks, sir. Thanks.
Okay. Thank you so much, sir. Thank you, everyone.
Thank you. Thank you.